GM, just a quick one before we get going. So, as you know, the Blockmates podcast is for informational and entertainment purposes only. Certainly shouldn't be considered as financial advice. We have absolutely no idea what we're talking about half the time. So, any investment decision you do make should be based on your own research and your understanding of the risks involved. One more thing as well, there's around 50% of people who listen regularly who aren't subscribed yet. So, if you please could just do us a favor and hit the subscribe or the follow button or the like button, helps content grow, helps us grow, helps it reach more people like yourselves, and it means the world to us as well. So that's the last I'll ask of you. So yeah, let's get to the episode.
GM and welcome back. In this video, we're taking a dive headfirst into IntentX and explaining what intents are and why this is a 0 to 1 innovation in DeFi. Now, the boys have been churning out a lot of content on intents and IntentX specifically. We've got a full interview. Jedi and the IntentX guys sat down on stream. Grant and 563 did a podcast on intents, and we have the wonderful article here by Emery on IntentX, which we'll reference in this video. So a lot for you to get your teeth stuck into if you so wish to further the research. So we will start off with the explainer, then we'll go through the actual platform itself, do a bit of a walkthrough and tutorial, and then finish up on a bit of token and how to get your hands on the juicy airdrop coming up. Let's jump in. So for TLDR, what are intents and what is this new way of trading? So essentially, intents allow for you to trade on-chain by making any source of liquidity available on-chain. So whether you're on, say, a centralized exchange or a decentralized exchange, think Binance, think Coinbase, think Uniswap, or even a balancer pool, you can actually tap into that liquidity. Furthermore, you can also tap into the liquidity of OTC desks. And these solvers here, which are essentially going to be market makers, they may also have their own inventory and their own liquidity that you can also tap into. So there's two parties in this intents architecture: the traders, that could be me and you, and the solvers, essentially like market makers. So these solvers are like on-chain travel agents, getting us from point A to point B with our trade. But unlike a travel agent, they actually help us to save money. This is as they compete against one another to provide us, the trader, with the best quote possible. For doing so, they also take an arbitrage as well. And more on this actual analogy in just a moment. But with these intents, this new architecture, you could have it for spot trading, like your typical DEX experience, but also for derivatives, which is what IntentX focuses upon. And this type of architecture is highly efficient, allowing for just-in-time liquidity, meaning that the protocol isn't required to have idle capital just sat in LP pools. So a bit on the lay of the land here, the crypto derivatives market is absolutely huge. We can see this. It does roughly 3 trillion in monthly volume and actually makes up over 80% of all crypto trade. So you can see that the addressable market here is a huge one. But one of the main issues here is that 99% of this trade for the derivatives takes place on centralized exchanges, where in the most part you have to complete a KYC. And we know a lot of jurisdictions are actually banned or geo-blocked from utilizing this type of product. Doesn't seem very fair. Plus, as they say, not your keys, not your crypto, a la FTX, the centralized exchange could always rug you. Then when we think a little bit broader brush, the actual price discovery of our crypto assets primarily takes place in sexes like Binance, as they have the most liquidity. But hopefully in the future, this could take place on intents-based protocols, since they aggregate off-chain and on-chain liquidity into a single marketplace where all the transactions can take place. This would therefore provide more transparency over that price discovery. So the quest here is to get this number up, this 1 to 2%, and for the home of crypto futures to be on chain. So that is the aim and potential of intents. Now, in terms of the current DEX derivatives protocols out there, we have order books. This would be the likes of DYDX. Some of the issues around this style of derivative is the fact there is a lot of capital inefficiency, often high transaction fees and slow transaction executions. Then with virtual AMMs, think the likes of GMX, they are the most popular, but they do have also issues around capital efficiency since lots of idle funds are required. Think about the LP pool GLP, it actually counter trades all the positions on the platform. And so open interest is restricted to what the protocol can pay in losses to winning traders. They also need to subsidize their LPs. So you often have high emissions of underlying tokens or very high costs for transactions. And you're also not really going to get very many long tail shitcoin based assets, as these represent a lot of volatility risk to the LPs as well. And not to mention, Oracle manipulation can also cause major losses as well, as has been seen. So therefore, a newer, more efficient method with intents should certainly pique your interest. And the market is showing us that the intents design may well be the path forward here. As you can see on screen here, this is the Uniswap X architecture. And this is obviously for spot trading, but they've gone down an intense approach. These guys have been the pioneers in DEX trading. And you can see in their spot approach here, they have fillers, which are solvers. And you can see from this design, they're going to be tapping liquidity, not through just their own pools, but other DEX pools, the likes of Curve, maybe Balancer, and other liquidity sources off-chain as well, like Binance and Coinbase, OTC desks, and others. So if we just read between the lines here with Uniswap and Uniswap X, you can see that intents must have very big potential. So head of Blockmates research here, Mr. 563 DeFi, make sure you give him a follow. He really hit the nail on the head with the analogy here for intents. So let me just read this to you. So he says, imagine you're in the process of booking your next vacation. You go to a travel aggregator, input your trip details, where you're flying to and from, your travel dates, and you select your preferences for the number of stops. You click search. In response, you're presented with a long list of flight options from various airlines, complete with prices and departure and arrival times. So a lot of information to actually sift through. However, if we distill down our desires to the basic level, it boils down to a simple statement. I want to travel from an origin to a destination on a specific date with X number of stops. So in this scenario, a travel agent can step in and do all the heavy lifting for you. They could find the flight that best matches your criteria and therefore save you the time and effort of combing through all those choices. But of course, they would charge you money for doing this. In the real world, they take a fee for that service. But with an intents-based architecture in DeFi, the solvers play the role of your personal travel agent, thinking up clever ways to fulfill your requests. But the best part with this is they actually can save you money. They're obviously fighting against each other for your trades. So with intents, all you need to do is say something like, I want to buy 0.1 ETH at a maximum price of $180. And at that point, a swarm of solvers will try and find you the best execution, competing against each other to give you that best rate. So they will source the liquidity from on-chain, off-chain, and other sources to fulfill this, and this will give you the most efficient trade. So this is a 0 to 1 moment in user experience for the DeFi participants, and it's a big step forward in increasing on-chain activity. So that analogy for me really helps hit the nail on the head. So let's run through the kind of back-end workflow of what happens at IntentX. So you would start here. So this is the flow chart. So we've got a trader yourself. Maybe you want to long some Bitcoin. So you come to IntentX. The first thing you're going to do is signal your intent. What do you want? Are you going to be doing a market order or placing a limit order here? Maybe you need to set the parameters such as the leverage slider. How much leverage do you want to use? And set the trade size. Then these solvers, so our trading travel agents, they're going to be streaming us live quotations of their offer based on the intent that we've input. So this data coming to us in real time. And it's important to note that the quotation that we're receiving here is actually for the best possible price. Now, the next thing is to actually push the first on-chain transaction. So if you're happy, you make a request for trade. So this on-chain transaction therefore locks our collateral into the position and sends it to the solver for fulfillment. Now at this point, the solver is observing our trade, and if they wish, they will therefore accept said trade, and they will deposit an equal amount of collateral into this bilateral trade agreement. So at this point, once accepted, the trade will be live and the agreement is executed directly peer-to-peer between trader and solver. So with the position open, This is the point at which in the off-chain environment, maybe within a centralized exchange, the solver would hedge their position off. So they remain delta neutral within this trade. The idea here is that they are only going to make a spread or some arbitrage on the position, not to have direct exposure. So in terms of closing this trade out, both sides at this point need to be monitoring their collateral, their margin requirements, and there is therefore the potential for a liquidation to occur. If a liquidation does occur, that would take place by a third party. That, of course, would end said trade. The trader, though, can close the position by sending an intent to the solvers for closure. The request for close comes in to the solver, they observe it, and they would process that order. It's at this point the position would also be closed, plus or minus any P&L owed to the winning and losing sides. But additional to this, the actual trader, we can actually just force close a position as well, but that is something that the solver cannot do. So that is the kind of workflow and under the hood approach here at IntentX. But we'll look at how this compares to the actual front end of doing it in real time in just a moment. So let's just run through a few pros and cons of this architecture with intents. Of course, the intent is likely to provide you with the best execution. You have the solvers working for you to find the best route for your trade. And so you're likely to get more bang for your buck. As they can tap more sources of liquidity, you're going to get deeper liquidity for your trade. This could be very good if you're going in with a large trade size, as it would split your order maybe between different venues. And by utilizing intents, if you're maybe in a geo-blocked location that can't use derivatives, well, now you can. And you also don't have to pass a KYC, so you can preserve some of your privacy. Then if we also think about these market makers who are providing the role of solver, they're likely to have VIP tiers on major centralized exchanges, so they can actually provide you with lower fees and a lower cost to actually going and doing a trade on a CEX yourself. Now, some of the pushback on the solvers that I've read into, first and foremost, are the solvers permissioned? Like, is this a unique small group of actors who are actually doing the solving? So A, has the protocol whitelisted good actors? And B, are these people going to work in our best interest, or could we potentially get screwed over? This, of course, will bring into the question of centralization risks if there are not enough solvers for a specific platform. Then likewise, if there is competition, but you had some collusion between the market makers, this also could be a major drawback, as it could give you worse price execution if they are to work maliciously. Now, a major advantage of the likes of IntentX versus the likes of a GMX around capital efficiency, GMX is quite capital inefficient, seeing as you need to have a lot of idle liquidity on demand. If, for example, you have $100 million of net short exposure on the liquidity pool, then you have to have over $100 million in that pool to pay out in the event of maximum losses. So therefore, you can only facilitate as much trade as the pool has. So surely beyond a certain point, the GLP pool is no longer scalable. Whereas with IntentX, tapping all these different liquidity sources, not having to house their own liquidity, it is somewhat infinitely scalable. Then a major advantage is the fact that IntentX will have very low lift in terms of adding new coins. The solvers just need to be able to tap existing liquidity. There's no requirement for an LP pool. And so therefore IntentX can move very fast to list the shiny new objects in the room and will outcompete the likes of your GMXs, your DYDXs, and other architectures out there. So we've done a bit of a deep dive there on the actual architecture, pros and cons, etc. Let's look at the front end and see how to use this. So here we are on the walkthrough part of this. We are on the webpage intentx.io, and to the top right hand corner we have the button that says Trade Now. Let's give that a click, and here we are on the main user interface. So first things first, this is deployed onto Base Chain as the first and kind of home base for this, and so you're going to need some ETH as the gas token on Base plus USDC. You're going to be trading using USDC as the primary collateral type. So you're going to need both of those things. So if you don't currently have any funds on Base Chain, here is, as an example, Synapse Protocol, where you can bridge funds from another network, say it's Arbitrum, over to Base, send some ETH, send some USDC, and we should be good to go. So from here, we need to create a brand new account, and we also have to log in with our Web3 wallet. So that is the current port of call. And to the top right-hand corner where it says connect/login, it will say create account for yourselves. So if you give that a click, What it's going to ask you to provide is a username that will be visible on chain. So use something maybe not too rude. And it's going to prompt you to enter a referral code. And you can actually save some fees by using the code blocmates, all one word, lowercase. And then once you've entered that in, just tick the terms and conditions, create the account, and it will prompt you to actually sign a message on chain through your Web3 enabled wallet. So I'll just quickly log into mine here. And what you're going to see from here, if you go to UPNL, which stands for unrealized P&L, you're going to have a deposit window. So you can see I've got $30 on hand here. Click deposit, and it's going to give you the ability to transfer your accounts from your on-chain wallet into the deposit balance here on IntentX. So you would literally just maybe max it out, send your funds over, approve collateral, sign it in your wallet, and then your funds will appear like so in your account balance. So in terms of the user interface, as you can see from this, we know that there's a lot going on under the hood that is very different from other venues we maybe have used, but the actual appearance here is very familiar, which is kudos to the team. There's nothing foreign about this, and I was expecting it to maybe feel or look a little bit different to usual, but that isn't the case. So what we have here is pricing data being streamed live from these market makers coming to us. If you want to go short, this is the bid price here, 42,561 on BTC. If you want to go long, the ask price currently 42,604. And this of course is streamed to us in real time, and thus it is a moving target each and every second. We also have the current spread here. That's the difference between the ask and the bids. The next funding rate countdown timer is on here as well. You can see the current funding rates on there for longs and for shorts. And currently this market has available liquidity of 418,000 US out of just over $7 million. Open interest on this is around 4.18 mil. We have the full charting interface. You can add some indicators on here, map things out as you so wish. You've also got the depth for this market as well listed on screen. And then we have all the different pairs. So I think currently 205 and counting pairs are listed on here, from your kind of short tail assets, Bitcoin, USD. You can even trade stables. But then we have more long tail assets on here as well, as some of these names might crop up to you. But we're just going to select a different pair on here. I kind of like Sweet at the moment. Chart looking pretty good. We'll probably long this in just a moment. If you come over to the left hand side, this is where you can start to fulfill the details for your intent. So do you want to do a limit order? This means you're going to select the price from which you want to long, or a market order. We're going to go with this as it will be a lot speedier for this example here. And we can see the current market price being streamed to us via the market makers. We also need to select our slippage tolerance. So on the more exotic assets, you're going to probably have to increase this somewhat, especially if you're trying to get in with some size. We're going to keep this at just 1% for now. And then from here, we're entering our collateral amount. So for these various markets, quite a lot of them, the minimum that you can get in with is $21. So do consider that if you want to come and give this a test drive. You're going to need to deposit just over $21, I would suggest, to have some maintenance margin on here as well. That's why I've put around $30 in here just for a play and a test drive on this account. And then just below, we have our favored degen leverage slider. Different amounts of leverage for different pairings. You can see for Sweet here, up to 40x leverage is available. I'm just going to do around 2x right here, right now. So my $21, going to do a 2x leverage trade of $21. And this is projected for me to receive 26 SUI in return. Just below here, if we scroll down, you can see position value, the maintenance margin on here as well, the calculation for that, the platform fee. The fee is 0.06% of the notional trade value. And we have, of course, our estimated liquidation price down here of around 46 cents for this token. So if we are happy with all of this, we would click on long SUI, and this is where we are pushing a transaction on chain. So if I click that, you can see all the details are in here. Press long SUI again. I then have to confirm this transaction in my wallet to push this on chain to the solvers. Just a tiny amount of gas required for that. If I click confirm, then in the background, we know what's going on here. We've got the solvers competing for us to bring us the best execution. We've posted our collateral. They're going to post their collateral. We have a pending order in here waiting. Should just take a few seconds. And once this is successful, this will change from pending into a successful order type. So here we have reserved, and then a further update will come through, and now it is converted to an open position here. So that has been filled. That bilateral trade agreement has been made, and we are now in on our position. So we are long some SUI on here. And as you would see, all the details are available for this open trade. We're currently up just slightly. We have a full health factor on here as well, showing you what your account health is and all of the relevant facts and figures in here. Now, if we go to position details and we just click on our position here, what's really cool with this is we have these share cards, and some of the imagery on here really is fantastic. So we have the kind of laughing Spanish meme that you must have seen online. Maybe if you're massively underwater on your position, you could use this one. Or if you're up giga percentages, we have the kind of Pepe frog there. So I think this is amazing for the kind of marketing, for social virality, to get the word of IntentX out there. And this kind of mimetic power definitely isn't lost on me. So we've opened a position here on IntentX. How do you actually close a position? Well, it's kind of the reverse of the process we've seen earlier under the hood. And so what we're going to do now is press close. And from here, we press close position and send this transaction on chain. And then the solvers are going to try and fill this for us. This takes a few seconds to go through, and now it has been completed. So that will go into my order history here. And as you can see, we lost 1 penny on said trade there. But overall, the feel of this is not dissimilar to any other trading venue, although we know that the processes ongoing in the background are very different to others and have many different competitive advantages over the others. I would say maybe waiting for a few additional seconds for better execution, for better market depth, for competitive pricing is definitely a worthwhile reason to be using IntentX. So I really do like the UI and the UX. Feels very familiar, and I'm very happy with this product offering here. So what's coming up? What are the next kind of steps for these guys here? You can see on screen, they are actually mobile enabled. So you can utilize this via mobile, which I think is great for many mobile first areas in the world to actually get onboarded into using on-chain derivatives. We've also got advanced order types coming, things like take profit, setting stop losses. Plus they also have more solvers coming online to offer even better, more competitive pricing. Think about it, if you've got 1 solver versus 2, with that additional competition, the end user is going to really win out. Now from Jedi's podcast with Levy, it was very interesting to hear that they will have full account abstraction and give users the ability to have like a Web2 login. So maybe just a Gmail login, and then using layer 0, have cross-chain deposits and withdrawals of assets. So a kind of just come, log in and trade with us, deposit from wherever you need and withdraw to wherever you want, just abstracting away all complexities with bridges, etc. to make this the most seamless trading experience. I think that is a major positive catalyst to have in the distance coming for IntentX. Now, top left-hand corner on the UI as well. So there are 3 million tokens and they will be dished out in X, IntX. More on that in just a second. So 3% of total supply will be 100 million tokens, will be distributed via airdrop to people who have accumulated points by using this early in its current beta stage. So if you do log in, as I showed you earlier, use the referral link blocmates when signing up, then you can come play with this and start earning yourself some points. Points will equal airdrop, so why not get involved? As you can see, we're in open beta. We're moving on to the token generation event next. And once the TGE does occur, this is when there will be trading incentives. So if we're just trading on there, they're going to be giving out X, IntX tokens to those who use the platform. And then some of those features in the pipeline I've just mentioned should be coming around the full launch sometime around the end of Q1 of 2024. Now let's just touch on token to finalize the piece. So onto token, what is the token going to do? Is there value accrual? What's the kind of go to market here? So 100 million tokens will be the max supply. There is a vesting period, I believe, for 3 years for this to be fully vested out. But the actual token utility here all surrounds staking your IntentX token, IntX, into X IntentX, which is the staked version. There will be full value accrual. So 100% of revenues generated by this platform are distributed into the X IntentX staking pool. So if you stake your tokens, you get all of the revenues. So this means, of course, we will have tokens circulating that are non-staked and then other tokens that are staked. the people who stake the tokens have incentives aligned here to stake this for a long duration. This is due to the dynamic backing with the staked version of the token. So let's look at that diagram. So multiple reasons to stake this thing. You want the revenue share, but also you can see from this kind of 16-week period, which is the maximum staking period on here. You see the red line, the rewards multiplier. So this is going to give you additional rewards. So these are going to be yields to you distributed in real yield of dollars, which you get a 2.5x booster on for max staking this thing for the 16-week periods. On the flip side to this, there is an exit fee for unstaking your position from IntentX back into IntentX, and this starts at the top at a 25% exit fee. So if you instantly unstake your position, you pay 25% of your tokens to unstake them, and then you can see it goes all the way down to 16 weeks. Where at the bottom here, so if you do wait the full 16 weeks, you only have to pay the flat redemption fee, which is 0.5%. So long-term stakers get the most yield. And also, if you do want to unstake, to pay the smallest possible penalty, you need to leave it in for the 16-week duration. So what will play out over time is this. The initial staked version of IntentX to IntentX token will be at a 1-to-1 ratio at the start. But over time, as people enter and exit this pool and they pay the fee payable in IntentX comes into the pool. So the pool over time will just continue to grow and grow and grow. So this means that the backing of IntentX to IntentX goes from 1-to-1 and over time will increase. Maybe on the final bubble here from 1 IntentX being backed by 2 IntentX. I know these terms can be a little bit tricky to think about, but if you just look at the diagram here, this means that over time, those who have long-term staked their positions will accrue more of the protocol revenues, as inevitably people enter and exit the staking pools, which benefits those with that long-term mindset. Hence, I do think that the actual play here, if you're bullish on this and the potential for Intents and IntentX to do well, would be to purchase some tokens and get them max staked as early as possible. So in conclusion, I really like the novel way that IntentX is going about serving the derivatives markets. They're not causing any liquidity fragmentation, and they are not hampered by the amount of liquidity on their platform. They're tapping all these different sources. Then the fact they're able to source and tap these different liquidity pools means that they can list tokens very easily with low lift and at a pace much quicker than the competitors. So if they're now able to go on and nail account abstraction, make this maybe mobile friendly and mobile first, all whilst providing you the best bang for your buck, then I think IntentX is really seriously ticking a lot of boxes. So I hope you enjoyed this one. If you did, smash a like on today's video, subscribe if you're new, and we'll see you in my next one. Peace.